Hello students, let us start our next session on the topic of convertibility. This is also one of the topic where I have lot of requests. Lot of students have doubt regarding what is current account convertibility, what is capital account convertibility, what is partial convertibility, what is full convertibility. So let us explain that in a very simple way. Now, convertibility as a concept is related to the BoP, balance of payment, and balance of payment is basically your account with the rest of the world, account of a country with ROW, rest of world. So, any transaction we do in foreign currency, I export something and earn, okay, any transaction in forex will be part of the BoP, whether it is done by government, whether it is done by you, me or any other citizen residents. So anybody in the country, a firm, a person or government does initiate a transaction, it is part of BoP. So it is not account of a government or a company, it is account of entire country, entire region. Now, in that account we record any transaction which is in foreign exchange. So you receive dollars for any reason, you have exported something, or your brother lives abroad who sends you money, or you live abroad who sends money back to India, so that transaction will be recorded. Similarly, you have an apartment in St. Petersburg and from that you earn a rent and you are living in India and you are earning rubles. So any earning that you have in forex will be recorded in BoP in the receivings. In the receipts, we have the earning. Receipts basically receiving, where we are receiving. So all the earning of forex will come in the receipts part, and similarly all the expenditure will come on the expenditure side, spending. So when you order something from outside, you import something, you go abroad for travel. So for whenever you need dollar or any other foreign currency, or you earn dollar or any other foreign currency, it is part of BoP. So this is all about BoP, and all these transactions are recorded there. Now BoP itself has two accounts, current account and capital account. All the transactions which are settled within same period or immediately is part of current account. So current account transactions are those which neither create assets or liability. So asset or liability is when, let us say, you receive loan from abroad. आपने बाहर से एक लोन लिया, you take a loan from abroad, a foreign bank, and that loan is in dollars. Then you have to pay it back later on, and that will be liability. आपको वो भविष्य में वापस करना पड़ेगा. You are creating a future liability for yourself. So you are neither creating liability, means loans will not come in current account. Okay, loans will come in capital account. Similarly, any other money that you have to pay back to others is still a liability. Okay, let us say someone has given money to you as investment. Somebody put their money into your company, but they can always separate as a partner, they can sell their stake. So even that is a liability for us. It may not be borrowing, we may not have to pay interest, but still it is a liability. So foreign loans, foreign investments, these are liabilities. Similarly, we can also create foreign assets. I buy a hotel in London. Now that will give me regular income after that, and that will be an asset for me. Now When I'm buying that hotel and I'm spending money for that purpose, that will also go in capital account. So we have this current or capital account, and I'm sure all of you are aware with capital and current account, because in budget also we use them. The revenue account and capital account also has the same logic. So let us move ahead from here. Now, in the current account and capital account, we have different nature of transactions. In the current account, there are transactions which are largely related to trade. Okay, export and import. That is in current account, because when you export something, you get money, the transaction is settled. When you import something, you make payment, transaction is settled. So your trade comes here. Then transfers. So foreign grants or remittances. Grants, remittances, they come in transfer category. So India receive a lot of remittances from abroad, because there are so many Indians who live abroad who send money back to their family. Similarly, export and import are trade. Now similarly, we have one more entry here in the current account, and that entry is about factor income. So we receive factor income and we also pay factor income. For example, salary from abroad. There are people who go abroad for an assignment. Let us say I go to Singapore for an assignment for 2 months and I receive salary from that. That salary also I will take back with me to my country. So that will come as factor income in India. Similarly, I was talking about having a hotel abroad, having an apartment abroad. So rental income is also a factor income. Similarly, you have invested in foreign shares. Let us say I have purchased Tesla shares in USA, or I have purchased the Microsoft shares in USA, or I have purchased some other shares in USA. They will give me dividend. That is also a factor income. Okay, that is also something we receive regularly. Similarly, we can have profit income. I have a company that has international presence and it has international branches, and those branches send me profit back. So there can be profit also from abroad. Similarly, I can also earn rent. Okay, sorry, rental I have already included, my bad. So I can also earn interest from abroad. I can buy foreign bonds, American bonds, European bonds, and in exchange those governments will pay me interest. So anybody can receive so many different types of factor income. So these are also part of current account. So current account largely deals with these three types of transaction: export import, grant remittances, and factor income. Factor income not only we receive in India, but we also send back abroad. So many foreigners have invested in Indian stock market. There is so much FII in India, foreign institutional investment. There is FPI, there is FDI. And all those companies, all those people earn profit, dividend, etc. on their investments. So we send a lot of profits abroad, we send a lot of interest abroad. So in fact, when it comes to factor income, we are in negative, because foreign investments in India are more than Indian investments abroad. So that is what we have here. Broadly, these three are there in current account. Now, what do we mean by convertibility? Now let us get back to the original question. Convertibility means how easily and up to how much amount you can convert domestic currency into foreign currency and foreign currency into domestic currency. Forex to domestic or domestic to forex. There are two types of currency conversions. Now we have full convertibility in current account. Since we have full convertibility in current account, it means for the purpose of trade, transfer and factor income, we have no limits, no practical limits for anybody. For purpose of trade, for purpose of sending money abroad, receiving money from abroad, sending profits abroad, etc., you can send as much as you want to. Of course, there are some practical limits. For example, $500 million. After that, you need some permission, but it is not restricted. And $500 million is too big an amount. Very few companies may breach that amount. So, for majority of transactions, for 99.99% of the transactions, those transactions are completely free from any limit. There is no limit. So, you can very easily get dollars in order to import, in order to send money to your children, your family abroad, in order to give gift to foreign charities, in order to pay salary to your foreign employees. So, there are practically very high limits there, and practically there is no limit for day-to-day transactions. So, all these transactions, for the purpose of all these transactions, you can convert money very easily between domestic currency and foreign currency either way. Generally, there is no limit when you convert forex to domestic currency. Generally, there is no limit on that. But when it comes to asking for foreign currency, when you buy dollar, on that only we have some limits. And for current account, even those limits are not there for practical purposes. That is why we say we have full convertibility in current account. We have full convertibility in current account, means you can freely exchange forex to domestic currency and domestic currency to forex. There is no problem with that. Now, when it comes to capital account, there is a little complexity. Now, let us develop the capital account transactions. So, in capital account transactions, we largely have the loans. These can be sovereign loans. Sovereign loans can be bilateral, multilateral. There can be private loans, which we call ECB, external commercial borrowing. So, there are loans which are there in capital account, then there are investments. FDI and FPI. These are also in capital account, and then we also have deposits. Okay, for example, bank deposits. So, lot of NRIs keep their money in their Indian bank accounts because those accounts pay them more interest. So, deposits are also important. So, these three are the big capital account entries. Now, in capital account, we have limits, and for capital account purposes, up to $50 million are available very easily. That is why we call it partial convertibility. Up to $50 million, money is available very easily for any purpose. But above $50 million, you need some permission. Okay? So, again, foreign currency can be converted to domestic currency without any limit. The limit is only on when you convert domestic to forex. So, when you want dollars or when you want other foreign currency, you may have to wait for some time because your requirement may not be approved immediately. We never deny anyone, by the way. The money belongs to someone else. We have to give it back to them. This is what we mean by liability. ये किसी और का पैसा है जिसने हमारे देश में लगाया है, उनको वापस तो हमें करना ही होगा. बट हम इस प्रोसीजर को थोड़ा स्लो कर देते हैं. We make this procedure little slow by bringing in approval. So up to $50 million, free process, no approval required, and you can very easily get the forex. So you want to invest abroad, and for certain Indian corporates, even that $50 million investment limits is not there. For them, even that limit is higher. For Indian company which are investing abroad, they can get dollars very easily. Largely the restriction is on foreign investors. So somebody has invested in India and they want to withdraw their investment. We just want to slow down the process so that suddenly they do not take away all the dollars from the market and destabilize the markets. Let me again slow down the process and explain to you in a simple way. What is the problem with full convertibility? अगर हम full convertibility कर दे तो क्या problem है? So full convertibility, if it is allowed, there is a challenge that anybody can take back their investments. There are many investors who have invested up to $10 billion in India, even more than $15 billion. Now, if these people are suddenly going to withdraw their money, it will destabilize the currency markets in the country. Our currency markets are not so deep that suddenly markets can give $10 billion to anyone. So markets have limited availability of forex at any given time, and hence we have some restrictions so that our markets do not become destabilized. And RBI doesn't want to intervene all the time. That is not good for the economy. So we want some limit. आपका पैसा है, आपको वापस ले जाना है, आप ले जाइए, but it will be little slow. We need some time to pay you back. We are not sitting with cash. Let us say that is the broader idea. You need your money back, give us some time, we'll give you. That is the broader understanding. Now, when this process has slowed down, एक फॉरेन कंपनी है जिसका इन्वेस्टमेंट इंडिया में है और उसको इन्वेस्टमेंट वापस निकालने में थोड़ा समय लगता है. मीनवाइल अगर ऐसा होता है तो आरबीआई को कुछ समय मिल जाएगा मार्केट में एक्स्ट्रा डॉलर डालने के लिए, जिसके कारण मार्केट पे प्रेशर नहीं आएगा और मार्केट डिस्टेबलाइज नहीं होगी. सो लेट मी रिपीट इट इन इंग्लिश. If we slow down the process of withdrawal, whenever any foreigner want to withdraw excess amount, there will be a limit on how much they can withdraw per day. So let us say somebody wants to withdraw $1 billion. Now it will take 20 days for them to withdraw. Every day they will be able to withdraw $50 million. Meanwhile, since RBI is aware, they are keep on pumping dollars into the economy and hence market will not destabilize. So our purpose is to prevent market from destabilization, and we have observed that this commonly happens in lot of other developing countries. Hence we do not offer full convertibility. There are many advantages with full convertibility. If we have full convertibility, it will improve our credit rating. It will reduce the बोरोइंग रेट्स फॉर अस. अगर हमें विदेश से उधार लेना है तो उसका इंटरेस्ट रेट कम हो जाएगा, हमारा क्रेडिट रेटिंग इंप्रूव हो जाएगा. सो इट हैज लॉट ऑफ एडवांटेजेस एंड इट विल आल्सो इंप्रूव द फॉरेन इन्वेस्टमेंट्स इन इंडिया. बट स्टिल more than that, we want to prevent any kind of destabilization or instability. As a result, we want to slow down the process, and that is why we maintain partial convertibility in capital account. So I will now briefly summarize. By full convertibility we mean you can very easily get as much as domestic currency against forex and as much as foreign currency against domestic currency as much as you want. That is what we mean by full convertibility, and that is available for current account purposes, for trade, transfer and factor income. Similarly, for capital account, where it is largely for deposits, sorry my bad, it is largely for investments that we have kept some limit, because FPI particularly is very volatile. It is also called hot money. So foreign stock market investor, they suddenly invest, suddenly withdraw, and they destabilize the stock markets, they destabilize the currency markets. We do not want that to happen, hence we have slowed down the process, and there is some trade-off. By doing so, we have reduced our credit rating. Because of that, our openness index is poor, and because of that, there are many opportunities we are missing, but we are ready to pay that cost. And so far, it is working well for us. Despite not providing full convertibility, India's system has good reputation and we are able to receive a lot of investments. So far this model is working for us, and we can continue doing that until we believe our foreign markets are very deep. Foreign currency market or forex markets are very deep and they can handle very large transactions. Maybe then we can offer full convertibility. So I hope you have improved your understanding on the topic, and if it is so, please like the video, share the video and spread the word. Thank you.